Yeah. Yachts and jets don't have cash flows either. So the world's full of things that are deemed valuable in the world. They have no cash flows. And of course, as we know, the perfect money has no cash flows. The whole definition of money, a liquid, the most saleable asset. But if you want something to be money, you want it to have no utility value. Gold is better than silver because it has less utility value. And when copper, or when you find something like silicon that has utility value of some sort, it becomes worse money.
Because Bitcoin is now showing lower volatility, its investor base is undergoing a transformation. Michael Saylor highlights this as a pivotal stage in the evolution of the cryptocurrency. Once notorious for dramatic price swings that fueled speculative activity among retail traders, Bitcoin is increasingly drawing the attention of large institutions, corporate treasuries, and regulated financial products that require greater stability. While this shift diminishes some of the excitement for participants focused on short-term trading, it simultaneously strengthens Bitcoin's reputation as a reliable store of value for long-term investors. Saylor argues that this phase represents a natural and necessary step toward mass adoption. This view is supported by the fact that public treasuries now collectively hold roughly $118 billion worth of BTC, while the asset itself has appreciated by more than 80% over the last 12 months.
And so I think probably people say, well, we don't really think this is good investment asset because it has no cash flows. That's an opinion that has developed in 2 generations. Certainly since 1971, and the period, from 1971 on till today, I think the world developed a view, and its view was, long-term capital is a 60-40 mix of bonds and equities. And bonds had some dividend yield to them, and then bonds had some coupon, and equities had some dividend yield or some earnings. And that's just the way they saw the world. And eventually, the S&P 500 became the monster. If you look at index investors, 85% of indexes are invested in the S&P. So many people think long-term capital, what they think of as money held for the long term, is an equity index like the S&P index. Vanguard, they commercialized this, and they made famous the idea of the Vanguard 500 and the Vanguard Index Fund. So when organizations are hyper successful with an idea, like 500 stocks in a fund, and when the entire institution, right, the S&P or Vanguard or mutual funds, when they're built on that idea, when a disruptive new idea comes along that's even better, it's not natural that they would embrace the disruptive new idea. They're kind of stuck in their ways. As a practical matter, in a world of that's U.S. dollar, the U.S. economy is growing, and the dollar is the king of the world. It's the world reserve currency, and there was no world war after World War II, right? Mm-hmm. So we haven't had a massive disruptive world war. Then you're living in a very particular situation, a particular time, and you could fall into. In calculus, we call it a particular solution to a differential equation. If all of the boundary conditions are set, and if this, 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 then you can just plug in this number and you'll get out that answer. And that is true as long as you don't change any of the boundary conditions of the assumption. If you've got the solution for aluminum, and then I change the metal to steel, then the formula doesn't work. Mm-hmm. So at that point, you can't use a particular solution. You have to use the homogeneous solution. You have to be not the engineer, but you have to be the physicist. You can't be the trade craftsman with the simple lookup table of the answer. You actually have to derive it from first principles. So what you see is most people have never in their life had to derive anything from first principles. They've used the particular solutions given to them by someone that taught them the answer. And that breaks down when, for example, your entire currency collapses. For example, if you live in a economy where the currency is collapsing, like Lebanon, and they freeze your bank account and the currency goes to zero, or anywhere in Africa, or if you lived in Argentina when the currency collapsed, then if you actually owned anything with cash flows, they're all worthless. So the irony, of course, is one of these good traditional safe assets that generates cash flows. Well, not in Nigerian currency, not in the Bolivar, not in the peso, not in the Lebanese currency, not in the Iraqi or the Afghani currency. I can give you not in a Russian currency, before the collapse of the ruble that took place at the turn of the century, 96 or something. So the people that have these ideas, they have a particular set of solutions that work in a very stable, closed ecosystem that's never been challenged either with external stress or never encountered a new idea. When the people that will get Bitcoin will either come out of very chaotic environments, collapsing currency environments where they had to think for themselves, or they'll be at their base kind of scientists, first principles thinkers, people that question everything and rederive it. So I think the great irony is again the CEO of Vanguard saying Bitcoin is not an.
According to Mr. Musk, whales and other large-scale investors have withdrawn over 18,000 BTC from cryptocurrency exchanges, moving these holdings into long-term storage solutions. As a direct result of this activity, outflows from exchanges have surged by an impressive 347%. Such behavior typically reduces exchange liquidity, and historically, these conditions have generated upward pressure on prices as circulating supply becomes more constrained. This ongoing trend highlights the growing confidence of institutional participants, revealing that the largest holders are not inclined to liquidate their assets but instead are positioning themselves for a longer investment horizon. When the available supply contracts while demand either remains steady or continues to rise, the environment is often set for rapid upward price movements.
An investable asset because it doesn't have cash flows, and then the largest shareholder of my company being Vanguard.
Ironic.
The most ironic outcome is most likely, according to Mr. Musk.
Let's zoom in on bonds as an asset class and maybe give a little master class for the mainstream audience about how you're revolutionizing the credit markets. I want to first start with just what problem did you identify in the fixed income world that you thought could be solved with Bitcoin?
Yeah, credit. If you look at the credit markets, you got mortgage-backed credit. Mortgage-backed securities are 1.5 times collateralized, and they yield like 2, 3, 4%. And then you have fiat credit. It's credit backed by the promise that the government will print more money, and that sets the risk-free rate. That credit, in Japan generates 50 basis points, and Switzerland generates minus 50 basis points. In Europe, 200 basis points a year, and in the U.S., about 400. It just got reduced by 25 basis points yesterday, right? So you have that kind of credit. Then you have corporate credit, and corporate credit is backed by the cash flows of companies, whether they're good companies like the Magnificent Seven, like Microsoft or Apple, or they're junk bonds, or they're struggling companies that are struggling to stay in business. Those credit spreads can range from 50 basis points all the way up to 500. But that means that when you're buying corporate bonds in Europe, you might be getting 250 basis points a year in yield, 2.5% interest. Well, the real monetary inflation rate is greater. So all of these countries, Japan, Switzerland, Europe, the US, they're all suffering from a form of monetary repression where the natural risk-free rates or the fiat yields are less than the monetary expansion rate and the rate at which scarce desirable assets are appreciating. So that's one challenge. The other challenge is those instruments are illiquid. Sometimes, like all preferred stocks, they're very hard to trade. Sometimes they don't trade at all, and they're under collateralized. So what we observed is the credit markets are weak. They're unhealthy, is how I would say them. If you live in Switzerland and someone is willing to give you zero or take 50 basis points of your money every year you have it in the bank, and that's the offer, one can't characterize that as anything other than weak. Yield starved is another way. And so a lot of markets are yield starved. And on the other hand, most people, like in the conference the other day, there were 500 people in the room. And I asked them, how many of you have a bank account? Everybody's got a bank account. You know, how many of your bank accounts yield more than 4.5%? None of them. How many of you would like your bank account to pay you 8 or 9 or 10%? All of them. Who's offering that? Nobody. What we see is the opportunity in the market is, unless you have Bitcoin, unless you have a long-term store of value, what I'll call digital capital, and you're going to hold it for the next 30 or 40 years, no one's willing to give you a fair yield for the long term. Like, tell me who's going to give you 10% interest for the rest of your life?
Well,
no bank.